What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 15th, 2022. Please go ahead and at this very moment click the like button on this video and subscribe to the channel. That way you don't miss any of my future videos. Today we're going to talk about the price action in the indices. We're also going to talk about my trades for the day, the setup for FOMC, etc. Let's dive in. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not go crazy and go YOLOing your account into any one of my trades or anyone's trades for that matter. All right, let's dive in. And would you look at this? Our box scores are finally green. We went through like a 2-week period there where it was just so difficult to come by a green day. And here we are. We had the S&P 500 finish up 2.16%. We have the NASDAQ QQQ finishing up 3.14%. IWM small caps finishing up 1.55%. Dow Jones up 1.86%. And last but not least, the ARK Innovation ETF, the Cathie Wood Special, up 4.02%. Our closing ranges were great. Everything closed towards the top end of the day's range. Volatility was down across all of the indices, which was another great development. The VIX, we'll have to check, but I believe it closed below a 30 handle for the first time in a few weeks, and the breadth was very strong across the board. One thing that is noteworthy is that the IWM small caps, they lagged behind everything else, which if this is like a truly very risk on tape, you would think that wouldn't happen. But I think the noteworthy outperformer here, we can see the NASDAQ outperformed the S&P 500. Take a look at this heat map. What a great sight. So we had the energy stocks all trading down today, and we had some big weakness in crude oil. And I was watching like some energy analysts on CNBC, and they were saying, hey, like due to the fact that there could be some sort of ceasefire, that could be causing the weak energy prices. And then what we cited earlier in terms of China actually shutting down part of its economy, that also hurts oil demand. Then also oil had just gone completely parabolic. So yeah, that was another factor. But take a look, this is the exact configuration that we want. We had Nvidia up 7.7%, Apple up almost 3%, we had Tesla up 4.63%. So really just, finally getting some relief across all of these different names. Sector map, take a look at this. So wow, I didn't even realize this. So the solar energy stocks, they were actually down in the beginning of the day, down considerably, and they ended up having a very strong finish. We'll have to take a look at this chart in a moment, but we had the gold miners pretty weak overall compared to everything else. We had regional banks selling off a little bit. Energy, of course, sold off, and I closed out my short position in energy today. And then let's take a look at some of these gainers. We had the semiconductors up 4.6%. We had the ARK Innovation ETF, of course. KWEB is up 4.67%. So yeah, just a broad bounce across the board. In terms of our style factors, the growth style factor finished up 3.09% ahead of Fed Wednesday. We had the momentum style factor up 2.56%. And we had the high beta style factor up 3.02%. So this is a very risk-on configuration where we have these bottom three firing on all cylinders. All right, let's take a look. This is our seasonality, and with it being the 15th, we are pretty much right in smack dab in the middle of the month, and this is pretty much the seasonal bottom. So we have stronger seasonality. My trend model actually flipped from negative to positive, which is great. My trend model is now at a +1. And then we just have a lot of fear that's baked in. So this is the first time in a little while where it actually feels like, hey, we might have some momentum here. Of course, tomorrow is FOMC. Jerome Powell could just drop like a tape bomb on us. But I do think a lot is priced in. Take a look at this blue or like teal downward trend line. Super interesting. We rallied all the way up to it, and we tagged it, and then we backed off. So the market is definitely cognizant of this trend line, and I think once we break the trend line, that'll be the real signal that, hey, the coast might actually be clear. take a look. This is what got me a little bit more encouraged. So on this weekly chart, gotta say I was getting a little nervous there because we were trading below the yearly points of control. And if you've been watching these videos, we've been talking about the yearly points of control quite a bit. This is the price at which the highest number of transactions occurred in 2021. Huge level, huge line in the sand. And we were actually trading below it. I believe we closed below it yesterday. So I was like, that's not good. And sure enough, we ended up rallying back above it. So when the market has every reason to slip into the abyss, like losing a key level like that, and then it just doesn't, that is always a good piece of information for me. So I'm actually much more open to the fact that we could see higher prices after FOMC. Of course, always a wild card, and we don't know for certain. But I think, yeah, trend model's positive. Dark pool index is looking good. Seasonality's looking good. All systems go. Let's take a look at our NASDAQ. Oh yeah, and before we do that, take a look at the hourly chart. So check this out. We reestablished ourselves inside of this weekly value area. And then here we are, we traded all the way up to the weekly point of control. So looking good really on all time frames here. NASDAQ. Nice, and the NASDAQ actually climbed back inside the weekly value area as well. NASDAQ was up 3%. And technical pattern, does it still look not good? Certainly doesn't look good. But hey, you got to start somewhere. And now we're above the 5-day EMA. So yeah, it's not like, oh my gosh, everything's changed. Now we're going back to the all-time highs. But hey, I'll take the gift. I'll take the positive price action. Russell 2000 still trading below this monthly value area. And the Dow Jones is trading just below that 20-day simple moving average. So again, that would be a nice positive development if we could get back above this level. All right, so let's take a look at some of my trades for today. I didn't do a whole lot of trading, but I closed out my energy short. I had these May 20th 76 puts, and I closed these out for $7.70. I'd paid $5.85, so that was a nice little winner, and it was a pretty quick trade. So these energy stocks, I shorted right here, I believe. So I was like 1 day before the top. And I just noticed this thing was going parabolic. A lot of times when you get a parabola, like I never short into a candle that looks like this, where you close at the top end of the range. I like it when the market pushes higher, but then sellers step in. That's always like a good sign to me that, hey, this could be getting a little bit long in the tooth. So I closed that out pretty much like right in the morning because, you know, it's not like I really think, oh my gosh, crude oil is going to be in such a bad trend. Like, you know, it's just horrible. It was really just, hey, it had gone parabolic. So that's why I was willing to step in and short it. And then other trade that I did, I had to close this one out. This one was kind of a heartbreaker, not going to lie. I put on these MU April 14th calls, closed them out for basically nothing. Closed them out for 28 cents. I had paid $6.20. And I just put here, even if this stock rallies, the odds are this will turn into a zero. This happens sometimes, but I will say there's a learning lesson here. And this is one that I probably should have taken off a little bit earlier. So this happens. It's part of the game. Sometimes you put a trade on, and immediately once you put it on, you're just completely wrong. So Micron, I put this on, not going to lie, like literally right at the top. Like at like 93.89, like the high of the day. And from day one, it was already marking at a loss. I put this on while I was on vacation. And look, once I bought these calls, it literally went down almost in a straight line. Like it just went down like 20% in like a week. So this one, I probably could have closed this one out, you know, maybe on day one or day two of the red action. But I did hang on to this one for quite a while. So yeah, you know, it's always just lessons learned. You know, as long as you take something forward for the next experience, you know, that is really all that matters. But yeah, closed out that Micron. And then I did add some positions. I got long the Upstart May 20th 100 strike calls for 1950. And I got long the SPY April 14th 425 calls for 1071. Take a look at Upstart. This name just moves so quickly. And yeah, now it's up 9.11%. We held on to the bottom of the monthly value area. So yeah, this targets a price level of 135.07. Could it get there? Absolutely. When this stock catches fire and when this stock sells off, it can move very quickly. This stock is a firecracker. And then of course the S&P 500 market was looking pretty strong today, so I got long. Those April calls, just basically playing for a continued move after the FOMC meeting. That was all my trading for today. Definitely good to see some more momentum in the market. So for tomorrow, just quick FOMC preview. We're about 10 minutes in. Okay, so for tomorrow, what I'm expecting, Powell is going to raise interest rates by 25 basis points. That is priced in by the market. The real variable is what he's going to say about the balance sheet taper. If he says like, hey, things are very fluid, I know we're in this war, we don't really know what's going to happen, so let's do a couple of rate hikes, we'll see what happens with balance sheet tapering, I think the market would perceive that positively. It's not really even like the market has to perceive it positively. A lot of these fund managers, they put hedges on their portfolio into known events like this. So if there's no risk from the event, let's just say he says all things that we know to be true already. As a result of them all having to unwind their hedges, that can push the market higher. Really the risk is that Powell comes out and he says, guys, things are bad, inflation is bad. You thought we were hawkish, you ain't seen nothing yet, we gotta step this up. Here's the plan for the balance sheet runoff. We're gonna set it in motion tomorrow, like that sort of thing. If he just comes out and he's super hawkish, that is likely going to spook the market. So yeah, of course, we're just going to have to see what happens. That's the best thing about the market. You know, everyone can have their predictions, everyone can have their feelings, whatever you want to call it. But, you know, we're all going to find out together at the same time. The Powell presser, I believe, the release of the actual, like, Fed rate hike increase, that's going to happen at 2. And I believe the presser is at 2:30. So stay tuned for that. Hope you all had an awesome trading day. Once again, hit the subscribe button. I'm trying to get this channel to 1,000 subscribers. Hope you all enjoy the rest of your evening. The weather is beautiful here out in the Philly area, and I'll see you all tomorrow.